Alright, hello everyone. Hello to all the Futex traders and to everyone else that's listening to us outside of the firm. I'm doing my weekly trading roadmap for the week starting the 18th of May 2015. Recording this on the Sunday, the 17th. And I'm just going to be going through some of the event-driven risks this week. We've got a couple that I'll be looking at. And just looking at some of the market structures and really where the opportunities uh, might be for us as traders in this coming week. So, to get us started off, I'm not aware of any particular weekend news. Done a quick scan, nothing on the horizon as of yet, but that may change coming into tomorrow. But in any case, from a news perspective, tomorrow there's not much, well, pretty much no important data coming out. Um, we do have, from a central bank policy perspective, we've got two central bank speakers, one from the Fed and one from the ECB. The Fed's Evans, which is a voter and a dove, and the ECB's Mersch, which is a hawk, both speaking tomorrow. So just keep an eye on that to see if we see any further um, commentary from those two key central bankers. If we take a look quickly at some of the market structures on coming into Monday, I always take a look at the Eurostoxx 50 and the Bunds. Those are my two main markets that I trade. So forgive me if I'm not covering one of the markets that you look at. In any case, these are the two that I take a look at. So firstly, taking a look at the Eurostoxx 50. And I wanted to point out, first and foremost, before I went into the nitty-gritty, I wanted to take a look at a monthly chart of the Eurostoxx 50, which is something I used to do for quite a while in my weekly roadmaps, but I haven't covered it in probably more than a month. So I just want to take a look where we are sitting and currently trading in respect to the longer time frame. So if we take a look on the longer time frame, obviously we're in 2015. Looking back all the way to the 2008 crisis, we're currently trading in the areas in which we were trading before we actually had the 2008 slump. And the peak of that range was made in 2007 up in here. So this is obviously not the all-time high of the Eurostoxx 50. The all-time high actually comes in 5,000 something. It's a lot higher. I think it was made back in 2000 or so. But in any case, where we are currently nestled, you can see we found support around this area, around these between these 3430s and 3474s in here. So what's interesting about this, particularly for me, is going back, you can see this area, these two levels that I pointed out in here, they provided a significant amount of support and resistance, major support and resistance, going back many years. So for me, I remember when I was first looking at the monthlies, so long as we broke above here and held above these key pivot points, the market would have scope to test this other side here, this other key resistance level at 38.79s, which comes in here. You can see that was swing lows back in 2001, swing high in 2002, swing high in 2006 and 2008. Also a swing low here in 2007. So quite a key resistance point. I think these 38.79s. The other side of this little box area range. And for me, as long as we're holding above this area, the market still has a lot of scope to test higher. Obviously, given the fundamental backdrop of QE, we've had a bit of weakness in recent weeks, although, firmly the technical structure still looks very bullish. So I think so long as we start bidding up into some key areas, we could see some good volume and volatility to the upside. Now, let's take a look at what that looks like on a shorter time frame. We take a look at the daily charts. We can see that the Eurostoxx 50, and initially I was looking at this as a head and shoulders pattern, but for me, that's kind of lost its umph just because of the way it's been trading below here. Now, I know a few traders are looking at this as an inverse head and shoulders. So the left shoulder's here, the head, and the right shoulder's here. I don't particularly like it. I mean, as a structure, yeah, it makes sense. We made a lower low here and then a higher low here. So effectively, once we take out this area, just from a very simple technical perspective, yes, you will see those buyers step in. I'm not quite sure I like it like any other inverse, just because the inverse head and shoulders I do tend to like at the bottom of a downtrend, and we haven't really been downtrending. This basically makes up half of this downtrend, if you want to call it that. So in any case, for me, the key pivot area that I'll be looking at to the upside is around these 3606 to about 3616s. Obviously, that's a pretty obvious one, but these 3606s were pretty key. We had that closing gap in there, that swing low, which we just tagged. So the closing gap was actually at 3605s. But anyway, that little area, we actually, we did manage to close above it this day, but on Monday of last week, we just slumped, kind of consolidated below it. So for me, once you start closing and building some structure above here, even if it's on a very small time frame, 5 minute, 5 minute, 10 minute, 60 minute chart, we're starting to build a bit of structure in here, a bit of a flag if we've, come up into this region. I'll be looking for breaks of that and, hopefully a move back into this area. I would probably be looking to target this key trend line resistance, just because it seems as if this market's beginning to flag within this region. Now, obviously, if we break that, we could obviously continue to the upside, but I'm looking to see if we can, see a bit of profit taking if we get up here relatively quickly. On the converse side, now remember, just to point out, we do have an inside week. So the inside week high, which I haven't noted here, is actually 36.11, so the high of this day on Monday. And the 34.81s is our inside week low. So now that is going to be very key and crucial. So obviously a break of that could see some volatility to the upside. Break of the low here at 34.81s will, I think, invoke a bit of volume to the downside, and we probably will get a test of these areas in here. So definitely be mindful of that setup coming into this week. Just to point out, before I move on to the Bunds, just want to bring up a chart real quick. Again, these ranges are quite big, so I can't really fit them in these in this Evernote. So I'm just going to take a look at the market structure and the market profile for you here live, and just go through it with you. So as we noted, these 36.11s is the inside week high. I know, as you can see here, it doesn't show that on CQG. For some reason, it's been shifting one of the last TPO prints of the previous week into this week's print. I'm not sure why it's doing that, but in any case, I know that the K's here is the inside week high at 36.11s. The key value area levels that I'm looking at are the 35.80s. In here, you can see that's the value area high, which is quite nice, just because we did see a bit of a pivot around 35.82 to 85 on Friday, which was OPEX. There's a lot of volume going through these 83s to 85s, and it's just above these 35.80s. So for me, if we're holding above here, especially above these 35.85s, that is going to be a key indication as to whether we're going to actually go and test this inside week high. So I'm going to be looking at that quite keenly. Obviously, from the get-go, if we're finding a bid straight off the bat on Monday or Tuesday, in the early stages of the week, I'd be looking to see if we can hold the VPOC, which comes at 35.48, and obviously the close, which would be also a good indication at 35.57s. The weekly value area low comes in at 35.14s, and now 35.14s, I really actually do like quite a bit. We have a few daily, swing lows and closes around that area. I'm really quite keen to see a reaction around here, because if we do get here, I think that could be a very interesting area to note, because if we do hold above here, it's going to give me a very good indication as to whether we're going to, make our way and auction to the other side of this value area. Now, on the contrary, if we break through this with very good volume, and I'm seeing good, good initiative by the sellers to hold this and build a bit of volume where we haven't really done much, that's going to be also a very good indication as to whether we can make our move to the downside and test that inside week low. So again, just watching those volume dynamics, seeing how it fits in with the market profile structure to see if there's any sort of edge on the intraday basis. So that's sort of how we're looking like on the market profile. I'm not going to go through many other levels to the downside or to the upside, but I will note to the below that we've got the previous week's inside week low, value area low at 3482s, and then these key areas here. Just I've got these 3444s just ahead of that weekly low at 3441s. Obviously, if we do break to the upside, you know, I'm not very keen on very many levels up until we get, at least to these these 36, 59, 60s, which is that weekly value area high. And above that, obviously, once you get up to the top of this distribution, I'm looking at this low volume area between 36.77s and 36.85s. Did very little volume in here, and that was a very good pivot on this week here when we were trading. I remember there was a very good pivot between these 77s and 85s, 85s being one of the key ones. So if we do get up into that region, I'm taking a look at that area, and obviously these 36.94s, which was that weekly high as well. So there are a few levels to the upside, but I'm not going to be, looking for them to hold on first touch. I'd probably, I'd play them maybe first touch with smaller size, and I'd probably get into a bigger position once I see that confirmation of a topping pattern. Either whether it's a 5-minute head and shoulders or some sort of key rejection candle, something like that to initiate something a little bit more sizable. Now, moving back to what I was saying, let's move on to the Bunds now. The Bunds being quite interesting as well. We also have, this is a weekly chart of the Bunds. We also have an inside week on these Bunds as well. So looking at the key areas, obviously, inside week, we want to be looking at the low of the inside week, 151.97, and the high of that inside week at 155.03. We have posted a red candle, obviously, on the week, but bear in mind, from the previous week we had a pretty big wick, and now this week we've got another big wick, or at least the wick making up at least 50% of that candle. So there has been some buying reactions in here. As to whether that can hold, we'll still need to see. But do bear in mind, if we do break above these 55.03s, I'm not looking at very much until we get to these areas here, which these areas I'm actually quite keen on. So particularly 155.87, the low of this little box area. I like these box areas because that shows me structure. That shows me an area where the market found value, and if it wants to hold outside of that value, I think there's good risk reward in that. Mind you, just above there at 156.06 to 07, which is also pretty much these lower levels of this range, we have the 50% of the move from the top to that very noticeable swing low in there. So I think this area between 87 and 06, I know you do pretty much have a 20-tick berth on that, but inevitably that area, I think we could see some decent sellers if we get there. Now, if we don't see any decent sellers and we're just floating through this, I think that's also a very key signal, and then possibly we can vacuum through this pretty big bulk in here. So that would be a very good indication to me as to whether the sellers are actually strong enough to hold this market lower. If not, then that's quite dangerous for those sellers, and I think we might start getting the puke, pretty strong puke to the upside. So bearing that in mind, if we do have that break to the upside, and now obviously if we break to the downside, there's really not much going on. I don't have the volume composite on the, unfortunately, don't have the volume composite here on my CQG. But if you guys check your market deltas, you'll see that the next real area of volume and structure comes in around 150.75s, basically 151.00, and it does come quite nicely with that high that we made in October of that really quick melt in the T-note yield that day in October 15th. So it comes pretty nicely with that high. and there's the big volume starts commencing at around 150.75. So just bear that in mind. That's the next real area of structure that we can see on this. Not like there's much structure in here at all, but from a volume perspective, on the cumulative chart, that's where we're looking, or at least where I'm looking. Now, let's take a look what this chart looks like on a 60-minute, because I think on the 60-minute, it's really quite interesting for me, and I think should be also interesting for you guys. Now, this is a volatility squeeze that we've been looking at in the office, particularly in London. We were looking at this trend line coming in from about the 5th of May. Now, we came into first contact with that on Friday. We held very briefly, and then we did break in the after hours. So after the EU cash session ended, we broke to the upside. Mind you, we held at this level in here, which we've seen a bit of resistance and support around these areas. But for me, I think the key areas are around these 153.98s, basically 154s. If you look again on the composite chart, that's where the key volume area starts. So as long as we're holding below those 154s, for me, I think the market might continue to find that offer to the downside. Now, you can lean on not only the volume profile, but you could also lean on these trend lines, because you've got this trend line in here, which is ultimately your indication. If we do offer below that and close below that trend line, I would expect a pretty vicious move to the downside, testing that other side of this triangular formation. Now, another thing you can lean on coming into this week is the fact that we've got, over a 3-day period, we've got a 3-bar triangle. So this is a one-day formation right here. All these red candles you can see in here, that was basically one day. We tested to the upside, we failed, and then we started making our way to the downside quite heavily. So all of this is one day. Then we've got a second day in here and a third day. These 2 days are within this daily range. Now that gives us a 3-bar triangle formation, which means there could be some good volatility, or at least volume. Doesn't necessarily have to be volatility, but at least some good volume on a breakout come Monday, Tuesday, or whenever we do break this formation. Now, really, you want to be looking for it to break the range of that 3 bars, so either 154.16s or down here at around 152s, or just below that. But really, I do start initiating positions when we break this, volatility squeeze. So obviously, this has been converging. Once we break this trend line or that trend line, I'm looking to see if we can break that other side. That's a little bit more of an aggressive play, but it does sometimes tend to work. So again, hypothesis, obviously, if we do break to the upside and cannot hold this swing high, we cannot hold and break back inside, that's going to be a very strong indication. I think I'm going to be quite aggressive to the downside. I do believe that we can, rotate to the downside very, very quickly if we fail to the upside. Given the medium-term trend, this market looks, very weak. On the contrary, if we hold above here, that gives us good impetus to test up into these 155.03s, which is our weekly or inside week high. So yeah, once we break that out, I think there's very little volume-wise holding us, to make that quick move, successive move to the upside. And remind you, this was a 38.2% fib, and there is probably a lot of short positions just below here with their stops, I'd say just above that. So, if we do get back above here, that could be a very, very decent move. Likewise to the downside, if we're getting that break, this is a medium-term downtrend. I think we could very easily see, once we break that, very, very easily see this swing low with no problem. Now, what I'd be looking for when, if this were to continue to the downside, with regards to market correlations, I like to see when the markets were moving aggressively before, I tend to see all the correlations that were working at that point in time, or were in work, or in place during those days. And then if I'm looking for a similar type of move, I've got to see those kind of market correlations. So, namely, the euro USD has to be quite strong, Equities subdued. They don't necessarily have to be selling off, uh, too much, but they do need to be weak, at least weak or somewhat subdued. They were actually selling off at the same time when we were seeing this Bund sell-off, but they don't necessarily have to be selling off aggressively. I do want to see the euro, however, quite strong on the back of that, and potentially I'd also like to see oil quite bid. If I see oil that breaking quite aggressively to the upside, together with all these things, these are the factors. I am looking for shorts in the Bund. Contrary, on the other side, if we're seeing all those on the opposite, it'd be quite good, I think, for moves to the upside in the Bund. So euro weakness, equities quite firm, and then oil quite weak. So these are kind of things I'm going to be looking at for trades in the Bund this week. If we take a look real quick at the market profile structure on a weekly basis, I think just to break this down very, very, very simply, weekly value area I comes in at 153.72s. So looking at that level as a neat little pivot, we're holding above here. I'm looking for longs, trying to see have this rotate trade towards that weekly that inside week high. And yeah, ultimately our weekly value area low comes in at 152.46s, which coincidentally is also the week before that they also had a weekly value area low at the same level. So I think I'm going to give that level a little bit more credence, especially if we're holding below it. I'm looking to initiate some shorts for a test of the inside week low, which is in fact actually a very bad low. It's got a a double bottom low there. So you don't usually see these hold, but mind you, just below that we do have a very, very strong buying tail. So there could be a reason why that holds. In any case, I'm looking at these very key levels to lean on, with given the candlestick structures that I just showed you as well. So let's move on to the next few days. Sorry, get that up there. So move on to the next few days. We're looking at Tuesday. So on Tuesday we've got the UK CPI year-on-year. Consensus of that is 0%. Looking at that particular data point to see whether we get a continuation of weak CPI numbers, or if we actually do start getting a little bit stronger in CPI, and we're not firmly heading towards negative territory. I think the key market that I'm looking at for that reading is the cable, just because the cable's been showing particular strength recently. Now, given the structure that I'm looking at right here, you can see the very, very key level is these 155s, basically 155.50, but just I'll put it in flat at 155. That is the key area for me. Now, mind you, we broke into that area, broke above that level, quite recently, about 4 or 5 days ago. And that put us firmly within this value area box right in here. You can see what I'm pointing out with my mouse. That is the value area box. The top of that value area box was 158.22, which we tested basically to the tick, and we've held as resistance. So for me, this does have scope to rotate back into this value area. But given the strength of this market, if we get a slight miss in CPI, just the first negative number, negative 0.1%, and the market overreacts to the downside, I think there'd be good scope to buy this market up, especially if it tests these 155s, because that is basically the lower end of this box. Very key support resistance level. If we get into that area, I think there's good scope to fade moves into this area that happen quickly. I wouldn't necessarily like it if we test it, or building a bit of a flag in this area for whatever reason. If we bring a bit of a flag above here and then we're testing it, possibly not as good. But if we get here quickly, given this structure, the strong structure, I think there could be a good chance to fade this, back into this range again. So just mind you, that's kind of what I'm looking at. Conversely, we could get a strong CPI number, which, given the strength, could give us even more impetus to move higher. Obviously above that, I'm looking at 159.43s. We've got a couple of swing lows and swing highs in there, and then ultimately 160, 177s. We've seen a lot of good resistance there. So just bear that in mind. This is the structure that I'm looking at. If we do get below 155s, there's the support and resistance point at 154.78, which you've seen hold numerous times. And then below that, obviously, we've got a pretty wide berth all the way down to 151.45s and 150.48s in here. But obviously, that'll be a pretty significant move in the cable to do just on that day. But over the week, possibly, you never know. In other news, obviously, on Tuesday we've got European CPI. That's a final reading. German ZU, which, okay, hasn't really been moving the market that much lately, but in any case, we'll be looking at U.S. building permits and U.S. housing starts, so looking a little bit at the housing sector on Tuesday in the U.S. And then from a central bank policy perspective, we've got the Australian RBA release, the May meeting minutes. Keeping an eye on that to see if we see any sort of change in their rhetoric there. Swedish Riksbank speaker Governor Ingves is talking, and the Canadian BOC speaker, Governor Pelosi is also speaking on Tuesday. So just keep an eye out on these central bank policy speakers for any sort of rhetoric there. On Wednesday, we've got the German PPI year-on-year European construction output and the U.S. DOE U.S. crude oil inventories, as always on a Wednesday. But I think the very key event-driven risks on Wednesday actually come from a central bank perspective. We've got, firstly, we've got the Fed Speaker Evans, but then later on in the day, we've got the UK BOE release of their minutes, their May MPC meeting minutes. Now, we'll be looking obviously at the voting structure, to affirm or contradict the recent dovish BOE quarterly inflation report. So the quarterly inflation report was relatively dovish. We saw downgrading growth expectations or projections and a downgrade in their CPI projections. So if we're seeing an affirmation of that and we do get a slightly dovish move in the markets, maybe there could be worth a small fade on that. Conversely, if we do get something that goes against what we saw in the QIR, so that therefore maybe we get a 7-2 vote or an 8-1 vote, something to show some relative hawkishness after this pricing in of the QIR. I think there could be some good opportunity there. Otherwise, I'm not really looking to touch this that much. Then we also have the U.S. Fed release the minutes of the 28th and 29th April FOMC meeting. Now, I think we're firmly expected to see the Fed minutes reflect a concern in the recent data. Obviously, the recent data being quite weak. Our jobs numbers have been disappointing. Even though the last NFP was pretty much in line, the revision was quite a lot lower. So we got revised down from 126 to like 85,000. And also our retail sales were lower last week. So we have been getting, some bad data out of the U.S. We were looking for the Fed to affirm this. But there are scenarios, obviously, the outlier scenarios is if they downplay the recent data, that could be interesting. Or if they give any sort of indication that the June or Sep meetings, there's a possibility of a rate hike on the table, I think that could be very, very market moving. Just looking at the market-based rate hike expectations, right now for June 15, we basically have 0% expectation for a rate hike. For September, only 18%. By the end of the year, we'll have about 50-50 chance of a rate hike. And even if we go into March of next year, we're still looking at a 75% chance of one rate hike. So right now, the market is priced so incredibly dovish. Obviously, I think if they could be priced even more dovish, they would be. But right now, we're seeing diminishing returns on those bets. I mean, if you had to go long Fed fund futures or long the Eurodollar and Sep 15 part of the curve, you've got very little reward for the risk. So at the minute, I think they're pretty much priced in just as dovish as they possibly can be. And if you look at some of the other markets, I was talking about this with WACAS and the trading floor the other day. If you look at probably the equities, or if you look at the longer end of the curve, there's pretty much, it seems as if there's nothing priced in with regards to any rate hikes. So, if we do get any sort of bombs, I think they could be very, very market moving. So we do really need to stay on our toes, even though they keep with regards to rate hikes, they keep disappointing. They're just pushing and pushing back, being a bit complacent. But we as our job as traders is to be ready for those bombs that come out of nowhere, whether it makes sense or not. It can happen. Trichet right hiked rates in the middle of a depression, so we just have to be ready for those occasions. Um, cool. Well, moving on to some of the market structures. Just with regard to the DOE crude oil inventories, I always look at WTI crude oil, and with respect to that, the market structure I think is very, really quite interesting. I've been looking at this, quite a lot. I really do think it's having an effect on the market, especially now that we're getting moves in gold as well. Gold is finding a bit higher. I think there's a general theme on the table for possible, the possibility of investors looking at inflation ticking higher, at least their expectations of inflation to tick higher in the future, just because we've seen these sort of moves, and even in the Bund, the recent massive sell-off could be an indication that there's a possible reflation on the table. In any case, I'm looking just at the technicals right now. And from what I can see right here, I think the very, very, very key immediate pivot for me is 58.42s. We've got a swing high in there, a lot of swing lows. We haven't been able to close below it. We just touched that on Friday. So this is a daily chart of the market. And we've done this just after breaking this very, very key trend line, going all the way back to that recent massive swing low at 42 bucks, which after that we've rallied pretty much 50 to 55%. I haven't checked, but it's definitely over 50% we've rallied. So it's a very sizable move in the market. This has swung up quite quickly. Now, given that we've broken outside of this trend line, I don't necessarily think this looks, for me at the minute, bearish. And the more I look at this chart, it seems to be giving me more bullish signals. But again, the pivot for me, if we hold above these 58.42s in the immediate term, I think there's still quite a bit of scope for us to test these 63.72s. It's a very nice little swing low in there. And obviously, if we break and hold above this bit of a flag, it looks like we're converging in here in price and potentially volume as well. We could be converging a little bit. So if we're breaking out and I'm seeing good volume, I think this could continue quite nicely. And again, conversely, if we break below here, I think there's good scope to enter back into this value area box and possibly even test these 54.24s, which was that very, very key level that we broke out from in April. So just keep an eye on that. I think the chart looks very, very interesting. Also, I mean, what I've been looking at is this, left shoulder, this being a head and this being a right shoulder. We broke that back in April. The target of that would put us pretty much at $67 to $68, the 100% target. Obviously we could reach somewhere between 63 and 65. That'd probably be, a good 65 or 75% of that. So, in these larger time frame patterns, I wouldn't expect the whole 100% to go, but keep that in mind. The price action has been indicative of a good, pattern play. In any case, that's crude oil. With regard to the event-driven risk from the Fed's perspective, I'm going to be looking at the EURUSD just to play it from a potential dollar strength perspective. Obviously, euro weakness. We've seen in recent trade, we've seen it quite strong. But again, I do think there is scope, given this, this trend that we've seen recently, for it to reach at least a short-term resistance quite soon. And I'll show you. It looks a lot better on the dollar chart, but in any case, we have broken out of this bit of a wedge in here. We tested higher. The key area is obviously just below that swing high. We've got this swing area 115.03s, or give it about 10-20 tick berth around that swing area. But for me, I'm getting a bit of a nice feeling about this area, this confluence area. We've got this trend line support, which we broke back in, I think, the latter end of, that was the end of 2014. And then we've got that major trend, well, that trend line resistance that's been holding pretty much this, since the start of this move. We've got 1, 2, 3 touches, and there's a bit of confluence around here. If we get into this area, I think there could be some decent some decent sellers at least the first time we get there. So mind you, that could be an interesting area. And especially if we're around this area and we get a particularly hawkish FOMC minutes, then I think there could be good scope for this fundamentally and technically to rotate back down. Now, what that looks like on a dollar chart, I went through this on my a weekly market wrap on Friday, but I'm looking very, very keenly at this area around $92 on the US dollar index. So you see this dollar's had a massive, massive move. Obviously, we've tested around that $100 area or that 100 level. And now, we're making our way back down slowly, slowly. We've had this, pretty aggressive profit taking, and we're coming into a very, very key area. This is a monthly chart now, and if you take a look, we've got quite a few swing lows, quite a few swing highs, and this is a monthly chart, so these are very, very major levels. And ever since we went through that area, we really haven't come back to it and tested it. So for me, that area is really, really quite key. Another confluence for that area is the fact that we've had this rally in here, and the 38.2% fib comes in at 92.18. So again, a little bit more confluence around this level, around this area, at least. So I'm looking at this area. If that coincides with a good area in the euro, I think you could execute some pretty decent risk-reward trades on that euro USD. So just mind you, this is what I'm looking at. It could potentially be a good opportunity for those that are trading short, medium, even long term. It could be a good area, so just keep an eye on that. That's what I'm looking at for this week. Moving into Thursday, just going to speed this up because it seems like I'm, running pretty high on the time scale here. From a data point perspective, I'm looking at Chinese HSBC China manufacturing PMI. That's a preliminary reading, so that could be very important. We've seen weaker and weaker numbers out of China, and then consequently we're getting reactions out of the PBOC, cutting rates, cutting triple Rs. It's in play right now. So China is in play. We need to be watching their data points. So I'm looking very keenly at that. We also have the European Manufacturing Services PMI, that's a preliminary number. UK retail sales, that's also quite important. US initial jobless as per every Thursday. US manufacturing, existing home sales, leading index, and Philly Fed also on Thursday. From central bank policy perspective, we've got the ECB's Draghi. I think he's speaking quite late at night, around 7 o'clock, so it won't really affect you during the trading day. But mind you, when you come in and trade that on Friday, that could be quite important. We also have the UK Gilt June 15 options expiry. So just watch out for any volume flows towards the end of the day. They seem to be quite nice on OPEX. And just from the perspective of the HSBC China Manufacturing PMI, I'm going to be looking at the Shanghai Composite Index. It's had a very, very, very rapid move up in the recent months. From basically the latter end of 2014 up until now, it's rallied just very, 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 very quickly, very, very successively. And we've had, our first week. This is a weekly chart. Last, 2 weeks ago, we had our first decent week of selling, and now we've posted an inside week pretty much in the middle of that range, pretty much finding value in the middle of that range. So I think this still has very good scope to break to the upside, and together with some of the other equity markets like the Eurostoxx I was looking at, it has an inside week. This is going to give me good something to lean on in case this is breaking to the upside, and it's quite strong. I can come into the European session if I see this has reacted quite strongly. I can lean on that and possibly get some positions off in the Eurostoxx or whatever else you're trading. Conversely, if we're getting moves through that to the downside, that could be also quite indicative for some moves in the European session as well. So I'm just looking at a couple of these levels: 44.15s to the upside, 41.87s to the downside, and obviously the major swing low here at 40.99s, and the recent swing high of 45.72. Just taking a look at that. I mean, I don't trade this, but being as if we're seeing very, very strong moves. This is a gap. I mean, the market's gapping higher, just trading really, really strong at the minute. I think it's quite important to just at least keep an eye on it and see how it affects the markets we're trading in Europe and the US. Moving on to the last day of the week on Friday, we've got German GDP. It's a final reading. German IFO, which is not really moving the market too much, but still going to keep an eye on it. And then the major data point on Friday is US CPI, which is consensus. The consensus for that is at 0.1%. So I think that this figure could be quite important. We've had a lot of bad data. If we do get actually a big shift in CPI, all the other data, the jobs. I mean, we know we've got a good jobs market in the U.S. They keep saying, some of the central bank governors or central bank participants there from the Fed, I've already really said that, jobs right now are really doing quite well. We're basically at, a level of unemployment that shows a very strong economy. We're at 5.5, 5.4%. It's really, really quite low. It's really, I think, the CPI that's really holding them back. So if we do get a strong number here, we could see again a pretty good reversal on some of the fronts that we've seen recently. But on the contrary, if we see that, you know, a number that's going to go with the trend that we've seen recently, something negative, something just really dire, I think we could see some really big moves. Especially if we take a look at the Tnotes. I want to take a look at this chart real quick. This market's been really, really strong last week. The Bund, I felt, the latter end of last week, even though it was coming up a bit, it was the Tnotes that was really, really just super strong. And it's quite important for me. If I like to look at this yield chart on a weekly basis, we did build that inverse head and shoulders in yield. This is the second week we haven't been able to close above that. And also within this trend channel, again, we haven't really closed above that. And, we are basically back inside that trend channel. So for me, this looks, if I had to say anything, this looks really quite bearish in yield. So price should continue up to the upside. The next logical area for us to test is this 1.8% yield, and then beyond that the 1.674% yield. So at the minute this is looking really quite weak in the yield perspective. So very quite strong on the price perspective. So if we do get a bad number out of from the CPI, the US CPIs, I think there could be some really strong continuation to the downside, reversing all of these gains that we've seen in yield. So keep an eye on that. That could be quite interesting on Friday. Obviously, the market structure is going to change quite significantly until then. But then again, at least you keep this in the back of your head while you're trading some of the other products. We also have the Fed's Williams speaking as a voter and a leading dove, and the BOJ releasing their monetary policy statement. So keep an eye on that to see if we get any sort of rhetoric there. And then we've got the German bond OPEX, Bund bubble shots all expiring on Friday. So we haven't really been seeing that many flows on the Bund OPEX, but you never know. I'm usually watching around 3:30 to see if there's any particular flows, and then position around that. So all right, that's basically my weekly roadmap. Just to go through really quickly my risk and money management plan. Monday, 2 event-driven risks, looking to allocate about 15% of my my weekly risk allocation. Tuesday the same. Wednesday and Thursday I'm seeing most of the volume and volatility, so I'm allocating about 50% on those 2 days combined. And then Friday about 20% of my risk allocation with regards to the event-driven risk that we're seeing around that day. All right. Well, thank you very much for listening. I mean, this is obviously my trading plan or roadmap. Not necessarily my trading plan. I haven't really gone through the nitty-gritty of the trades, but at least the areas and the structures that I'm looking at to position myself around. Please bear in mind, if you are a novice trader, you cannot just listen to what I'm telling you and trade off of it. Obviously I have gone through 45 minutes worth of my roadmap, but you should also be doing an equivalent amount for yourself. Even though I'm talking through this in 45 minutes, I've spent about 3 or 4 hours looking through these charts and figuring out my levels. I'm gonna have a lot more quickness in recognizing levels and looking at things because I've done all that research. If you're just listening to me for 2 or 3 minutes, That's not going to stick in your head. You need to draw out your own roadmap every week and trade off of that. Um, right, I just wanted to send that message home for some of the younger guys. But thank you guys for listening. Hope you guys have a profitable week, and we'll speak again on Friday when I do my weekly market wrap. Thanks a lot and good luck. Take care. Bye bye.